reversal patterns, and also the wedge pattern that we had discussed last can be used both as a reversal and a continuation pattern. Now, when we are talking about continuation pattern, next comes this flag and the pennant patterns. Now, this flag and pennant patterns both are part of a already existing up or down move, and after the flag or the pennant pattern occurs, then there is a continuation of the move. Hence, they are called continuation patterns. Now, when we are talking about flag pattern or pennant pattern or any consolidation pattern, we should remember that these patterns are formed due to a price balance or due to a balance between buying and selling pressure after a certain move. So earlier, suppose we are talking about the uptrend, there was an up move, then there was a buying and selling pressure, and due to that equilibrium, there is a certain kind of geometrical pattern that is formed, and then after certain point of time, if the buying pressure increases, the price breaks out and the up move journey resumes. Similarly for down move, after a certain down move, there is a balance between buying and selling pressure, and when the selling pressure again goes above the buying pressure, the stock falls after the breakdown. So during this consolidation, what happens is that after first initial few price movements, the range becomes a little bit narrower, and also due to the range bound movement, the volume participation normally goes down, and then when there is a breakout or breakdown, we expect the volume to be on the higher side. If on the breakout or breakdown the volume is on the higher side, then we can be little bit more assured that the technical breakout or breakdown that is happening, that is sustainable. So initially the volume should be high during the initial move, then during the consolidation volume slowly dying down, and then during the next leg of the move, volume should pick up. This is the ideal situation. Without this kind of volume confirmation also, if we see the price pattern behaving, we should take the trade with certain kind of stop loss. Regarding stop loss and targets, I will discuss one by one. Now, one more point I would like you to understand, that you might have seen a spring. What happens if you compress a spring? It becomes very small, the range becomes very small, and now you leave it, it expands very fast. So consolidation patterns like flag and pennants are just like that. Price is just compressed within a very small range, and as soon as there is a breakout, there is a fast movement expected. Now let us understand how a flag pattern works. First we discuss the flag pattern, and then we will go to the pennant pattern. So for a flag pattern, let us discuss the bullish flag first. First there has to be an up move. Then what happens is that the price forms in a form of a parallelogram in the downward direction. So what happens is that there is up move, and then this kind of a parallelogram is formed, and the price is within the range. Then after certain point of time, when the upper boundary of the parallelogram is breached, the target of the trade is, first thing is that in the flag, first there was an up move, and the sudden up move that was there, that is the pole of the flag, and this downward shaping parallelogram is the flag. So from the breakout point, if we add the height of the pole, we get a potential target, and the stop loss should ideally be below the nearest swing low before the breakout. So first there is a pole, then there is a flag breakout. So we project the target, and when the target is reached, we can book entire amount of profit, or we can trail with a stop loss. Similarly for a down move, first there would be a initial down move, then a upward shaping parallelogram, and when the parallelogram is breached on the downside, the lower support boundary is breached, we just project the initial pole and project it on the downside, so that whatever movement that is happening, we can actually have a potential target with the stop loss just above the recent swing high inside the parallelogram. So let us look at an example here and understand how flag pattern works. Here we are looking at the chart of FCL, future consumer. Here initially you can see a goodish bit of up move, and then you can see this parallelogram forming here in the form of a flag. And once it was breached, you can see how there was a swift up move, and if we had projected the length of the pole from the breakout point, we could get the potential target. The market moved beyond that also, but that was our potential target, and that's why I told that you can book entire amount of profit or book part or trail the stop loss. Now here we saw the bull flag. Let us now focus on the bear flag also. Here we are looking at the looping chart, and in the looping chart you see that after the initial down move there was a parallelogram shaped correction of the down move that was happening. So it took the form of a flag. Now the distance between these two support and resistance line were maintained, so it was not in the form of a wedge, and when it was broken, you can see when the support was broken in the looping chart in the month of May, how steeply the stock fell almost 200 rupees from the point of breach. Here the stop loss should have been just above the nearest swing high, and the target should have been projected by projecting the pole of the flag here. Now we will look at the pennant pattern here. The pennant pattern is just similar to the flag pattern. The only difference is that in the pennant, instead of the parallelogram shaping correction, the shape of the correction is normally a triangle, or ideally a symmetrical triangle. Flag and pennant, both the patterns are required to be formed within a time frame of 1 to 8 weeks, ideally 1 to 4 weeks, but within 1 to 8 weeks. But if the pennant is being formed and it takes time more than 8 weeks, suppose 12 weeks or more, then it is a triangle. That is a very important chart pattern that we will discuss right now after this. But the difference of pennant and a triangle is that the triangle is formed taking a much longer time period, that is more than 12 weeks or so. So again, for the pennant, we would be looking for initial thrust of up move, and then there should be a triangular shaped correction, and after the breach of the triangular shaped correction, there is a breakout, and at that point you should project the length of the initial up move, that is the pole, from the breakout point, and actually set a target, and the stop loss would be again below the boundary of the pennant, and look for the target, as we have said, adding the length of the pole at the breakout point. Now similarly, for a down move, what will happen is that after initial down move that forms the pole of the pennant, there would be a triangular consolidation. The range of the price movement during that smaller triangular formation would actually become smaller and smaller, and at the moment there is a breakdown from the pennant, the support line, one should take a short trade with the stop loss above the resistance line or above the latest swing high, and the target should be just projecting the pole distance of the pennant from the breakdown point in the downside. Now once we have discussed the